Everybody loves to talk about taxes and the tax benefits of using certain retirement accounts like 401ks, Roth IRAs, etc. But what most people don't know is that there's a retirement account out there that blows all of them out of the water. Introducing the HSA. Hi, my name is Thomas Kopelman. I am a financial planner for high net worth millennials, and helping people on taxes is one of the biggest parts of my job. For a lot of the people that we work with, they're making anywhere from $500,000 to $2 million in income, and they're paying six figures in taxes. And so tax planning is extremely important to them. And so things that they're considering are maxing out 401ks or solo 401ks. They're thinking about backdoor Roths, mega backdoor Roths. They're thinking about all the different deductions that they have. But most people don't know that the most tax efficient investment account out there is the HSA. So what is an HSA, you might ask? An HSA is a health savings account. So many people know about it, but they don't know it's an investment account. What the average person does is they say, hey, great, I have an HSA eligible plan. I'm going to contribute to it, and then I'm going to spend it on healthcare costs this year. But that's not what you want to do if you're a high income individual, and let me tell you why. The first reason is that this is a pre-tax account. So if you put in $8,300, it not only reduces federal taxes, it not only reduces state taxes, but it's also pre-self-employment taxes. No other retirement accounts do this. It's super tax advantaged. Number two is look at the tax benefits. So there's a tax deduction. Then you can invest these dollars and let them grow tax deferred. And then you can use them in the future on healthcare costs tax free. What most people are doing is they're only using two of those tax benefits. They're not using the third one, which is the biggest one, that tax deferred growth, which can be used then tax free in the future. Not everybody can use an HSA. You have to have a high deductible health plan that qualifies. For most people, they have this through work, but not everybody does. I personally, through my job, do not have an HSA option, so it's not something that I can use. But for most of my clients, they do have the ability to use an HSA. But that doesn't mean that you only pick the health insurance plan that has an HSA. You need to look at all of the other parts of it. You need to look at, do you spend a ton of money on healthcare? Is a low deductible plan potentially better for you? But let's say you go through and you decide, hey, an HSA plan is the best one for me. The next thing that you need to know is you can put in $8,300 a year if you're a family, or $4,150 a year if you are not married. So that's a really great tax deduction, $8,300 pre-state, pre-federal, pre-FICA. That can save you quite a bit of money. You can then go invest those dollars. And if your plan does not allow you to invest them, there's plenty of my clients that are not able to invest it. So what they do is they go set up an account at Fidelity or somewhere else, and each year they roll their HSA there so it can be invested. Additionally, you can invest that for the future. You can wait to retirement. Everybody's top expense in retirement really is healthcare expenses, so you can use that tax-free. Another great benefit is, let's say this year you have a baby, it costs you $5,000, you decide to pay out of pocket, and then in 5 years you're like, man, we're in a tough financial situation, we need some money. You could go reimburse yourself for that expense as long as you keep the receipts. So you want to make sure that you're keeping all the receipts from your healthcare expenses, so that way you can make sure that you can be reimbursed for them in the future if you need to. This is where people say, well, I've been using an HSA every year. That kind of stinks. How am I going to be able to afford this? And if you're a high income person, you definitely should be able to afford this. You also always have the ability to reimburse yourself for those expenses down the line. So it gives you the flexibility to choose it. If you pay for it today, you don't have the flexibility to go invest it. You already lost that benefit. And so why would you want to invest it? Well, as a high income individual, you really only have a certain amount of tax advantage accounts. You have mega backdoor 401k. You have your traditional backdoor Roth. You have your traditional 401k, and then after that, you're pretty much out of all of the options that you have. And so your HSA is the last one. You can either then take post-tax dollars and invest in a taxable account, or you can put this money in an HSA and let it grow tax-free and get a deduction today. That is significantly more beneficial. So to recap, an HSA is a health savings account. You can put $8,300 in a year if you're married. That is pre-tax for state, federal, and FICA. It can then be invested and grow tax-free. It can be used in the future on long-term care, tax-free. It is a really great account that you want to make sure that you're utilizing correctly. Thank you for watching. If you enjoyed this video, please leave a like and go subscribe to my channel for more personal finance content. And as always, please leave your thoughts in the comments below, and I promise to get back to every single one of them. We'll see you back next week.